Okay, hey everybody, it's Brett with a weekly market update for the Bitcoin and crypto markets. It's been a little bit of a time here and a lot's been happening. So I want to unpack this a little bit for everybody. And of course, if you like the content here, hit the like button, make sure to subscribe, hit the bell so you get alerted for when we have new updates. So again, this is Brett from Moonstream Crypto, and some chart analysts have been really watching this ITF, the ETF, the IBIT, might as well call it the ITF, enough acronyms already. But here's some interesting data here. I'll come back to this chart, but I've been tracking the money flows into the ETFs. A couple weeks ago, about 10 days ago, there was $10 billion in the ETFs between BlackRock and also Fidelity. Now it's $26 billion, and I've seen I've got a real-time monitor watching this. So Fidelity really catching up, Invesco and ARK shares really kind of trying to catch up anyway. And GBTC is still losing assets under management. So I did hear that GBTC is launching their own mini ETF to compete and have lower fees. Not really that interesting, but on this ETF chart of the IBIT, of course, the BlackRock ETF, was noticing lots of buy pressure. I was watching this all the way back here when it broke above $25 and put this green arrow as a buy point. And we were very accurate on that, getting into these markets. And these green buy blocks are one of our new indicators that show money flow coming in. A little concerning here, a bit of a sell-off here on the IBIT. So this we'll keep an eye on. Would certainly make sense to come back around $40. And so what that equates to in terms of the Bitcoin price, we'll have to see. I did notice some interesting clues earlier on our class we did earlier today, but don't want to pack this too much. But we did notice that MicroStrategy, if we just put that in real quick, could be a surrogate to the overall market in terms of, let me just pull up another watch list here. I know I've got a lot going on, but bear with me because this is some interesting alpha. We are watching a handful of stocks like Coinbase and MicroStrategy, but isn't it interesting that MicroStrategy kind of tends to lead the markets here in terms of pullbacks? And so bearish engulfing candle back here in February, and then we saw this big gap up, filled the gap, and now we're kind of seeing a bit of a pullback here. So this is kind of interesting to watch, and some of our signals also triggered early buy signals on when to get into MicroStrategy, which would have been good times to get into crypto overall. But at any rate, what I wanted to talk about today, more importantly, is the halving. So we've got some interesting data here now to confirm what I've been saying for some time, and that we are likely to have a left translated cycle. Many people are talking about that now. I've been talking about it for about 6 months as a possibility and building a use case. First learned about it through Bob Lucas, L-O-U-K-A-S, on Twitter. He's got some very good information in terms of sort of the macro theory. And so this is a study that I've been putting together on the halvings. So the halvings happening around these orange lines right here, right? So typically price action goes kind of sideways, even down. We've seen big retracements going into the halvings, but I think we're all starting to realize this time is different, and all this Bitcoin and all this ETF money rather, and of course MicroStrategy just pouring millions, hundreds of millions of dollars into this market. So I'm going to touch on the study that I've been working on that you guys have seen before, the path to 100,000 and 150,000 Bitcoin. So stay with me. We're going to talk about that shortly. Point of this chart here is these are sort of loosely drawn parabolas showing that the price really increases after the halving in all the past cycles, right? And so in the end of the green lines is when the sort of profits cycle is over. But we are seeing this run up in price going ahead of the halving. And so of course, the halving due to happen in April here, so right over this area. So, not surprisingly, the funds and all the whales and the big corporations like MicroStrategy trying to front run the halving. So I've just sort of drawn this as a screenshot and to give us an idea of what we could see, what we could be looking at this time. It's not exact, just kind of a wild ass guess here on what this might look like. But hey, if that happens and we get the halving in here, and we start to peak though a little bit earlier. Actually, I moved it, and I shouldn't have moved it. This is what we're seeing. And so that would kind of put us, running out of steam, maybe even this year, and at the levels that I've been sort of suggesting in the next study, which I think is around 200,000. Again, this is very loosely drawn. The point is we're front running the halving. So that left translated cycle does appear to be playing out, and so we'll have to keep an eye on that. I did want to talk a little bit about the pi cycle top. If you are not familiar with this, it's a free indicator you can use. It has some benefits and some flaws, but it has correctly called all of the last market cycle highs, and even going back into the prior cycles. I do want to talk a little bit about what I think could be happening, and the possibility of a double top here this cycle. I don't know anyone else talking about this yet, but I'm going to show you why I think that could be likely. A push up here into 2024 and a peak this year, maybe later this year, followed by potentially a rapid sell-off and then another high in maybe early 2025, and so partially because we've just seen this thing go vertical. But the pi cycle top crossing here and here, and we had two early on. Now, of course, Bitcoin has matured quite a bit, and the later cycles have acted differently. But we did see the pi cycle top here in 2017, and again in 2021. I was watching this, and because we had all bought into the narrative of Bitcoin going to 100,000, I said the pi cycle top must be broken. It's wrong, because clearly we're going higher, and it was wrong. It was right. I was wrong. So I think it's really important to not buy into any narrative that we are all being told, or when there's consensus. So there's a key point there, because right now what I'm hearing a lot about is people are waiting for the pullback. And so that is the sort of narrative, the consensus. So I'm of the belief we don't see one. And I think that we could see a little bit of a blip here, because it is also true that not only are we at the old high, but typically in the pi cycle top, we have some resistance early on at this green line. I won't go into the formula, but essentially it's the 350 moving average times 2, and then the orange line is the 111 moving average. Doesn't really matter, not going to get into that. But we see it rejected here and here and here, and finally got above it, and then sort of really went vertical. We saw it reject over here, and then finally broke through it. But because we are running into this halving, I think so. This, by the way, these blue lines are a bars pattern copy of what happened over here, just to stretch it out a little bit to make it fit current prices. And so we're stagnating a little bit here. It is the old high, but I can see us pushing straight up to 100,000, possibly even up to 155,000. I'll show another study here quickly that how I get to those numbers, and and then this high up in this range, I'm targeting around 210,000 as the ultimate sort of high. Before we get a big bear market, it's possible we could see this mini top. So stretched out, would we see the pi cycle top cross at this first one? I don't know. This is a bit of a guess, and it's a roadmap of possibilities. I don't like to follow along what everybody's saying. So here is the study I've been sharing with you guys. You can find updates over on TradingView, and just look up Brett Fogel. It's just free information and some studies that I've done. But this is where and why I think we could hit 100K Bitcoin here, even before the halving, and go to 155K Bitcoin as this part of the cycle this year, and ultimately 210,000. It simply doesn't mean it has to happen, but the prior cycle, using a Fibonacci from the high low, we did exactly predict and forecast the former high, right? So high to the low and then stretch it out. It did call the prior cycle high around 69K. And we draw it there, it nailed it. So same thing, if we go from this high to the low at around 16.5, which I correctly forecast 6 months before that in May, when people like Dylan LeClaire, editor of Bitcoin Magazine, said we wouldn't go below 30,000. And in a private whale session at the Bitcoin conference, I raised my hand. I said, what would you say to anyone like me who thinks we'll go below 20? And he was very condescending and said, well, I just get an hour presentation why I don't think we'll go below 30. And the whales in the room looked at me like, who let this guy in here? But clearly that was correct and they were wrong. So we have a pretty good read on this. Again, this is a bars pattern of the last cycle drawn out a little bit to kind of fit current price patterns. Doesn't mean this happens. These cycles tend to be similar, and for now it's following fairly closely. I was going to say this is invalidated here at one point when we were pulling back, but then we did push higher. So as of now, this is looking like we go higher and could push right up to 100,000. And the last cycle, of course, everyone thought we'd hit 100K. We had many models that said that. And again, the narrative was the dangerous part. The consensus is dangerous. So I do think this cycle in the next, possibly by the halving, this would suggest in late March, but probably into April, I would say. If we stretch this out a bit, I think that's more reasonable to push right up to 100,000 and then get the pullback, and maybe pull back even to the old highs, although probably somewhere in the middle, because as we know, this time is different and there's massive money flowing into these markets. So we have to account for that. There's currently around $30 billion in the market, and the BlackRock alone has suggested maybe 10 trillion from them. So that's going to significantly raise these prices. I do have some intel that can't name names, but somebody that was at the BlackRock investor conference recently heard them say they're raising their allocation percentages significantly on Bitcoin. And what's public, as we just heard, that they are potentially going to be buying Bitcoin in some of their other ETFs and or allocating some of their other ETF money to the IBIT. I'm not exactly sure how that, but it's going to be more buying pressure. The 10 reasons path to Bitcoin 155K, I won't go through all of them. Of course, number one is already happening. BlackRock, Fidelity, other ETFs pouring in to Bitcoin spot market. A big difference between this and the futures ETF, of course. Futures are cash settled, not Bitcoin settled. So money flowing into an ETF, a spot ETF, they immediately are buying. It's sort of programmatic buying. So money into Bitcoin. Bitcoin, number two, the Bitcoin Bank Term Funding Program just ended, and I was expecting more bank failures. I was expecting some shock in the markets. We're getting a bit of a shock today because the PPI numbers came in higher or worse than expected, and that's spooking the market a bit. So maybe that replaces this, but a pullback's really was going to be a good thing. I think we can all agree. You can't, if you jump off the roof, you need the trampoline to bounce higher. You need both the roof, the gravity, and the trampoline to bounce much higher. We can't just keep going up and up and up without some pullback. And the bigger the party, the bigger the hangover, as we say. So I'd rather have a little bit of pullback now to help us propel higher onto this model. So anyway, new information equals new decision. This may be invalidated, but right now what I'm seeing, we are on track for this left translated cycle. Lots of money flowing into this market. We could easily push right up through to 100K and then see a deeper pullback, with then pushing higher, taking a little longer out into, say, November of this year. November, I feels right to hit that 155K level. And then it's anyone's guess from there. Any catalyst could propel it higher, and one of those could be QE money printing to pay down the debt. I'm going to back up a little bit to the Bank Term Funding Program because they've ended that, but also I'm hearing and speculating that we will see quantitative easing in the form of the government buying back. Instead of doing the BTFP and printing money, they might go back to the banks and say, hey, you know what, we're going to buy back some of that underwater debt that you have. So essentially some QE that'll help prop the economy. And of course, for the election cycle coming up, the Biden administration, the Biden regime is going to want to do that and not look bad. So at any rate, that's why I have an X here. We did have one big bank signaling they were on the brink of failing in the New York bank. But then big players stepped in. Ken Griffin stepped in with $1 billion. And so I think to prevent more bank failures, that's what will happen. The government buying back some of the bad loans. Because what happened during COVID, the government came out and said, hey, everybody, don't worry. The banks buy some treasuries and buy some notes from us and borrow money from us at this low rate. And we promise we won't raise interest rates. Well, we know how that worked out. So a lot of banks are carrying underwater debt and non-recognized debt on their balance sheets due to some fancy accounting. They can hold it on there as the original rate, but as things come due in the BTFP, at some point this is going to come to light. Could create more bank failures. I would expect if that happens, more money flows into Bitcoin, flight to quality, all of this leading to, of course, more of a supply shock and demand surge. De-dollarization and hyperinflation, the BRICS nations, I've just posted something on our Instagram that we originally were following that, each of the rest of these are small smoldering campfires that if any of them ignite, the rest could all turn into a major, like a good old-fashioned California campfire, right? Or forest fire, rather, a much bigger. And so BRICS now is suggesting instead of using a gold or yuan-backed currency to buy their energy, and BRICS, of course, is Brazil, Russia, India, China, South Africa, and their GDP has just surpassed the NATO nations and the bigger of the rest of us. So it's worth noting. And but instead of using those, they're now talking about a Bitcoin-backed currency to buy their energy. What does that mean? It means less demand for dollars, more supply for dollars, hyperinflation, potentially de-dollarization, but also adding to the supply shock of Bitcoin. So these high numbers that people are saying, Cathie Wood, $1 million Bitcoin, is certainly possible. If we cut it in half, though, even 500,000, 600,000, I think in that range, we could see that in the coming years, certainly, especially with all this money flowing in, because I'm going to jump back over to the ETFs really quick. When $10 trillion, when there was $10 trillion in right after the ETFs between BlackRock and Fidelity, we saw Bitcoin fly. We saw $10,000 of increased value. Went from 50K to 60K in a heartbeat, and now we're, of course, over 70. That was on $10 billion. If we add a zero, $10 trillion just from BlackRock alone, and we think it could be more, that could be a 10x. It'd be a $100,000 increase in price alone from current levels based on that math. And that's not including the other ETFs or institutional money. So, of course, there will be curveballs along the way, but this is worth paying attention to. And now is the time to be watching that. Let me jump back over to that study just to comment on a couple more things. We have corporate accumulation. MicroStrategy just bought $700 million more of Bitcoin. And today announcing, the last 24 hours announcing another convertible debt note for an additional, I think it's $600 million as a senior debt note to buy, you guessed it, more Bitcoin. So with that, I was speculating recently also that I'd be surprised if we didn't see other companies like Tesla and Apple start divulging on their balance sheets and their 10Ks on their quarterly returns that they are buying Bitcoin. Well, sure enough, there's somebody, a whale watcher has just circulated that a known Tesla wallet has been buying Bitcoin. So this is going to further accelerate price, because musical chairs, nobody wants to be last to the party. So obviously some more factors here. Country adoption. El Salvador is up considerably in their Bitcoin purchases, where they were ridiculed before. They're being hailed as heroes now, and other countries likely are buying and will be buying soon. Another big one, the post-halving reduced miner supply. That'll be cut in half. Currently, the miners are selling $12 billion of Bitcoin per year to pay for their energy costs and their mining equipment, and they'll have half as much to sell coming after the halving. So less sell pressure. 12 billion to 6 billion is going to decrease sell pressure and add to the demand surge. So, and that's all going to contribute to this less available exchange supply, because whales have been buying, taking Bitcoin off of exchanges. This ultimately has to result in a demand surge, and all the way around. So, we just don't know how much of an explosion this is going to be, or, again, to the forest fire, when all of these ignite together, 1 + 1 = 3. So we'll have to see how that plays out. A couple other factors: political support in favor of Bitcoin and crypto certainly would help with some Bitcoin and crypto-friendly regulation. Cynthia Loomis is a big proponent. She's been burning methane byproducts of oil refineries to power Bitcoin mining rigs, therefore, ergo zero footprint on the environment. So that's good. RFK is now coming out as pro-Bitcoin. Probably doesn't have a chance to win, but who knows? And so we'll see. I think by the next election, we'll have much stronger candidates endorsing the crypto and Bitcoin. Not saying that one of the current candidates isn't a strong candidate, but he's so far not entirely in favor of Bitcoin. So anyway, with that political support, and then of course the bursting of the global sovereign fiat debt bubble, $35 trillion went into the global markets after COVID, and that has not washed out yet. And so that's why I'm watching these closely, and these levels as possibilities, potential possibilities. Okay. By the way, if you like these kind of studies, we dive deeper into this every week on Wednesdays for an hour, actually 2 hours on some classes, and you can find out more about that at moonstream.io/max success. It's a class called M3 Active Trader with me, and with permission from Max here, because we want to give you guys the tools and the skills to really maximize this bull run. So you get a private chat room in Signal, very secure. I'm posting in there every day, and you guys can ask questions in there every day. Weekly classes on Wednesdays. We just did a 2-hour class with some really interesting information, a little deeper dive than what I'm doing today. Great reviews. You can go there and just read about it. Members area with some training. You also get some bonuses, dollar cost average worksheet, a portfolio tracker, updates in real time, and some other bonuses like high probability candlestick patterns and chart patterns and other things. Quick photo of me showing I actually trade. I got a bunch of monitors, 6 or so here today, and you can read all about that as well as customer reviews. So I would highly recommend checking that out. And plus, you can get an hour with me, normally $1,000, a bonus, a 1-hour private session with me to get you off on the right start here. This one right down there, that's not for everybody. That's just for friends of Max on the channel. So moonstream.io/max success. Now's the time to be getting into these markets and really getting familiar with what's happening. And you can also find me on TradingView here with various studies. But the class I just told you about really deep dives into that. I try to do these as often as I can, but as you can imagine, everyone's reaching out for help and advice right now. So happy to be here and give that to you. And if you guys have any questions, put them down in the chat, and we'll do my best to follow up on those. A couple of coins here. I will take a quick look at the total market cap. Be aware of this. We're getting a sell-off here. Was not unexpected. Our buy block indicator told us about 2.7 trillion. I actually thought it'd be a little earlier. A bit of a blow off top here. So somewhat concerning. I wouldn't be concerned until we get our signal showing on the weekly. And again, we have some custom indicators that correctly called the top last time exactly. And so on a weekly time frame, I'm not worried. This is a bit frothy. I'd like to see it come back a bit on the total market cap. But you see over here at the market top, we had our bearish ERI give us this sign, get out of the markets. And I was telling people to get out of the markets in November of 21 and December, and pounding the table to get out in January of 2022 because our signals told us so. These have all aligned back here, red here, red here, red here. So that's what we'll be watching this time. I'm not worried that this is a top yet, but there is a possibility of a double cycle top that I think I mentioned on this weekly basis. So, we'll keep an eye on that. Total market cap, also want to be careful of this $3 trillion mark and level, because I think most certainly we'll see a bigger pullback then. But what's interesting here is you can see I drew these lines here. Previously, we went higher than I thought and then saw a pullback. I don't think we go pull back that far. We've got some strong buy pressure there, but I think we do want to be careful around 3 trillion on the total market cap because these big round numbers do tend to be resistance. But however, I'll just touch on that. By the way, some people are giving kind of outlandish targets on the next market cycle top here. I get the wrong thing here. So essentially, I heard an estimate of 9 trillion. I don't think that's really reasonable, but if we have 10x the money come in on Bitcoin is now a bigger portion of the total market cap than the rest of the market. And so if we see, let's just say, another 9 trillion to 10x from here, that seems crazy. But could we see 6 trillion market cap? Absolutely. Could we see potentially 9 trillion? That's such a big number, but certainly we can see that these numbers are potentially possible. And on the 3.618, I had I put this down here, but 3.618 extension could take us at $9 trillion, guys. Does it happen? We'll see, but remains to be seen. We're still very early, and in the scheme of things, we've got to get above that 3 trillion mark, and then the next year or 2 years could be terribly exciting. Although I'm just not convinced that we don't see an early cycle peak here, and then some kind of a meaningful pullback, and then the parabolic run. I just too early to tell. Let's also take a quick look at the DXY falling nicely, and in this channel here that I've been watching here. Why isn't this showing up? Maybe a little bit late on this. I have another chart for that. Let me jump over to here. So basically predicted that we'd push up to around 105 and rolled over, which we did. Now these blue lines are from a prior area. I think it's over here, just kind of redrawn a bit. Let me just undo that. So we're seeing this kind of pattern play out, which we see a lot in crypto, and so not exact, but pretty close, right? So if we do that and a little lower, maybe I could spin it a bit, but hitting down on and heading lower, I believe, all the way down to what we're calling crypto super pump rally zone. So whatever hiccups we have here, we could see a bit of a bounce on the DXY right in there where we're headed towards, but ultimately I think we do head back down, and this range below 100, we would see everything flying. And I've got another version of this just to look at it, and going a little deeper than usual on this, but again, we cover these in more detail on the weekly M3 active trader class. So now this is the real-time DXY showing that bounce, and so we did see a head and shoulders here, so I forecasted we'd head lower in this trend channel. DXY up, Bitcoin down, so if this is normal, I wouldn't be worried unless we saw DXY getting back above 103, and losing this trend channel. But I do think we're still on the right path, and it might be a little bit longer, but hey, we're heading the right direction. So good news there. All right, Bitcoin, of course, down 3,400 today. Bearish engulfing candle, not terribly bullish in the short term, but that's okay. And on our radar indicator, but it's been overbought for some time. We did sort of have a pullback here. Let's see how the end of the day sells off, depending on when you see this video. Of course, because we had this big sell-off here that bounced and was eaten up with Bitcoin and ETF money. But, we're overextended here, guys. This should come back, and we'd like to see some kind of a pullback here to get back within any kind of meaningful trend channel would be better for a future bounce. Now, I don't necessarily want to see it come back down to 60K or below, but this is where there is support. And, that would be about, a 10 to 15% pullback, which is entirely normal for crypto. And so if we close as a bearish engulfing, you may want to take some profits off the table. Not financial advice, just good trading. And of course, we'll be watching our indicators, which are certainly overbought. And we'd love to see these kind of come back down and catch the dip, these ideal optimal points to catch on the lower end when they're oversold. Ethereum pushed up to $4,000 as expected. It's all red on this radar, so it does look bearish engulfing candle. And our indicators, by the way, you do get the indicators for free, or part of the M3 active trader, so keep that in mind. Getting an alert here, the IBIT crossing down order block indicator on, so let's take a look back at this. This is a very fluid moving pattern here. It says the 1 hour. Okay, so yeah, I've got my alert set on the IBIT sell blocks. Haven't seen many sell blocks on this. The 1 hour is certainly first. Possibly getting a crossover on the 1 hour, the 21 and 50 period moving averages. Again, let's see though how the day closes, because there are buy orders right below us. So it could be a bit of a bear trap here, pulling prices down, load up on the shorts, and then they rally it back up higher. I'm more looking at the longer time frames. Did get a sell block on the 4 hour as well, but we see strong buy pressure just below, and wouldn't be surprised to see the IBIT come back down and retest 39. If it gets lower, 38 certainly fine. Look how far it's come. Needs a pullback, and that would be healthy in the longer term. That's about all I have time for here today, though, you guys, and wanted to get something out to you. Let's see, what else are we watching here? We could look at some of the other high flyers, but mostly red on the altcoins. And let's see, don't see a lot of green. I wouldn't be buying anything right now, and so this is not a time to be buying. I did have some coins that looked good earlier in our class, but right now I'm not inclined to talk about those and be buying anything. I'll be waiting for the dip And you guys, again, if you'd like to join us for next week on our active trader class, sorry, I can't help but draw trend lines where I see them. Just go over to moonstream.io/max success, and you can learn our methods, get access to our indicators. One of our favorite ones I'll just share with you, as and here, I'm not here to sell you guys on anything necessarily. I'm here to give you the tools to win, and now's the time to be getting ready for the next move higher. One of these indicators we've just programmed is called the rocket on the launch pad. Such a powerful indicator. It's a green candle that rests on either a 21 or 50-day EMA with the wick down below, kind of like a bottle rocket. It's a pattern I've been watching for years, and it has to be on a support level like a trend line or a moving average, but when it happens, typically it flies up in the air like a rocket. We've just programmed that, and you can set alerts on these so that when you find them and you can set alerts on them, then that's how you find them. We're also working on a screener. But here's another classic rocket right in the 21-day EMA. Light the fuse, shoots up into the sky, runs out of rocket fuel, comes down to earth. The other new indicator we have for sort of showing that is the new Bollinger Band indicator. When it gets above the modified Bollinger Band, I don't use the standard Bollinger Band. It does not work for crypto. We have modified the settings so that when it touches the upper Bollinger Band and gets above it, you'll see red lines. I might have it turned off. Here's an example. But when it touches the upper Bollinger Band, invariably it goes sideways or pulls down. Here's an example of an extreme condition where if it gets above that upper Bollinger Band, again with our modified settings, we put a red line on it because invariably it sells back down, and you can see that sold all the way off there. So these are some cool new additions that you can find out about. But anyway, what I wanted to share, let's just see anything else I want to share. I think that's about it. It might be some good buy opportunities here on these pullbacks here. This is Phantom Coin, one of the ones we like here. Sure enough, got above that Bollinger Band, pushed a little higher, but I'd love to see it come back down. Should be some good buying opportunities, you guys. Pullbacks are buying opportunities, buy the dips. But keep an eye on Bitcoin and the total market cap as for direction. And just quickly, I'll show that. So here we have the total market cap minus Bitcoin is at 1.2 trillion. So if you subtract that from the total market cap, that means Bitcoin is at 1.3 trillion, 1.3 trillion plus. So Bitcoin market cap is certainly ahead of everything else. I guess we can look at Bitcoin dominance really quickly. So this is interesting. And looking at ETH dominance down, Bitcoin dominance up. And look, I don't know, I drew this this sort of squiggly pattern here a while ago, not quite lining up, but on Bitcoin dominance, all green on our radar indicator. Here's a rocket back here showing that was going to head higher, and it did. So Bitcoin dominance, I do expect it to push higher, at least up into these ranges. I will move it out a little bit. New information equals new decision, so let's do that. But up in this range, Bitcoin dominance should have some trouble. And let's see, a fib here shows golden pocket in this range. So between 60 and 64 area, give or take, Bitcoin dominance could pull back, but we're in a nice upward trend, and that's good. So anyway, you guys, hope you enjoyed the video. Again, if you enjoy these, hit like down below and make sure to subscribe with the bell. And Max and I appreciate it. And of course, again, if you want to find out more about what we do over here, you can go check out moonstream.io/max success and get a free hour with me, and plus some other free reports and everything. So didn't want to go into too much detail, but you can read all about it there. Okay, all right, bye everyone. Have a good week, and I will try to update you as often as possible. Take care.